Alright, welcome in the next video, guys. In this video, we're going to talk about something called Fibonacci Trick. We're going to call this as Fib Trick because it's easier to pronounce, but the whole name is Fibonacci Trick. This trick has something to do with the newly added minus 0.27 level, but this will be a 4-hour confluence. And for me, it's easier to break it down in this course because, once again, it has something to do with the newly added Fibonacci level. So, as I told you, this level, this Fibonacci trick, will be a confluence for the 4-hour strategy and will give us one more criteria that confirms us into buying or selling something on the 71 level on the 4-hour time frame. So this minus 0.27 level has two purposes. One is this Fib trick, and the second one will be partial taking, which we will break down in the next video. But here it is. What is a Fib trick? Let's just imagine that we have a bullish structure, price is moving in a bullish structure and is creating series of protected lows and breakout structures to the upside. The last recent protected low can be found here because price wiped out the structural low and broke the high point, meaning a new protected low point can be found right here. Normally, we are just simply pulling the Fibonacci from below up through the retracement high, and there is the setup, there is a 71 level where we are normally entering with the 5 criteria we are using, a sweep, a break, volume, order block, Fibonacci, plus 1, which is liquidity creation. But this Fib trick will be another confluence, will be another criteria added to the whole strategy, and it really does the job. It confirms the trade even better. So how can we even use this? Let's just imagine once again that we are in a bullish structure, we just pulled the Fibonacci, we found the retracement point, the protected low point, we have everything in order to pull the Fibonacci and we are expecting a trade right here. We are going to pull another Fibonacci, but not into a bullish direction, but into a bearish direction. So let's just imagine that here is the last recent protected low, here is the last recent high, the retracement high, and price starts an individual bearish flow leading down to the 71 level. So you're expecting a trade on the 71, expecting to enter here. How we are using this another Fibonacci into the opposing direction is that basically we are looking for the retracement, and once price retraces, pulls back and then breaks an internal low. In this pullback, which leads down to the 71 level, breaks a low point, then there will be another Fibonacci added to this whole system where we are pulling a Fibonacci from this high point that initiated the break of the structure, internal structure right here, and we are looking for the retracement point right here. It means that we are not entering in a short trade right here on the 71 level because that will be stupidity because we don't have a protected high right here. It is not protected. It's just a simple indication for price that it's heading down to the 71 level because what we call a trick right here is the minus 0.27 level. If it matches with our original 71 level on the long side for this trade, or actually not a trade, but for the structure that we pulled out on the Fibonacci, if this minus 0.27 matches with the original 71 level, then it will be another confluence. Why? Because price usually, after creating a setup, after reacting on a 71 level, after reacting on any kind of Fibonacci level, it can be 0.5, 618, 71, 0.8, 0.81, there are lots of Fibonacci levels, lots of usages of the Fibonacci level. But if it reacts on some kind of Fibonacci level on this retracement, it can be anywhere in between this region on the 0.5 up to the 0.81. It can be anywhere. But if it rejects there, it usually just goes to the minus 20.7 level. Or sorry, minus 0.27 level. So when this matches up, when this aligns right there, the 71 matches with the minus 0.27, it means that the shorts are basically going to lead down to the 71 level. All the TPs will be blasted out there, so the short TPs will be fulfilled there. Lots of people are taking profit there. These are magical Fibonacci numbers. These levels work like magic. You know that already from the 71 level. So most of the traders, most of the short traders who are entering into short positions targeting this level will exit their positions right there, so their positions can be converted into new long orders on the original bullish structure. So in this case, when these two levels are matching, it doesn't have to be an exact match. There could be pips of difference. This level can, the 0.27 level can be somewhere around here, can be a little bit below than the 71, but it has to be somewhere around the 71. And in this case, if this lines up, then it will be another criteria, it will be another confluence added to the whole 4-hour strategy, because these numbers combined together work like magic, as I told you. So this is one of the usages we can use on this Fibonacci level in this way. And the second one will be same stuff basically, but with one difference. We have the same bullish structure. Price is leading to the upside. We have a really nice bullish structure, breaking structure to the upside, sweeping lows, breaking structure to the upside again. So we have the same scenario, but with one difference, is that after creating the protected low point here, and before creating the breakout structure, or after creating a breakout structure, price leaves behind an unprotected low point, which breaks the structure again. You know, this happens lots of the times where you have a sweep and then price just starts to create the bullish structure to the upside with series of unprotected low points. In this case, when you have a retracement on this high point, price retraces, and with this retracement, it breaks the last recent or any kind of low point that is on the way up and is unprotected. In this case, once again, when the pullback happens here, you can pull the Fibonacci trick again. You can pull the Fib trick from the high down to the retracement point after having a breakout structure of an unprotected low point. And once again, in this case, if the number of the minus 0.27 matches up with the 71 level right here, we will have a Fib trick applied, and this is one more confluence to the 4-hour strategy, because lots of the traders are going to enter here around the 71 level, somewhere around here on the magical Fibonacci numbers. Lots of entries will be pulled, lots of entries will be entered, and once again, price usually goes down to the minus 0.27 level, and most of the TPs are located there. And if the TPs are getting triggered, all of the positions are closed in profit. That profit that has been closed there with the commission can be reused to actually enter in the market here. And this is not the only logic that the TPs are getting triggered here, but positions are getting freed up. The bearish pressure actually is getting exhausted because all the sell position that has been opened somewhere around here in the OTA, in the optional trade entry area on the Fibonacci levels, all these entries, all the bearish pressure coming from these entries are getting closed. So the chances of reversal here happening on the 17 level is higher because the sell positions are out of the game. So now purely longs can come into place and can replace all the sell positions. So this is the Fibonacci trick. But let's just see a live example for this on the recent gold action, price action that we have here. So on gold, we have a nice bullish structure. You know, we are coming in a nice bullish structure. Let's just focus on the last recent leg right here, where we had a sweep of the previous low point, and from this low point, price is coming up to this high point. In this movement, we have a new sweep of liquidity on this line, where price just swept out the low point, a structural low point, and from this sweep, it decided to break the external high point. Very nice. We have a beautiful protected low point down here, and we have a retracement point up here. From this low, the structural breaking movement has started, and from this high, the retracement possibly will start and has already started. So here, applying the first principle of this Fibonacci trick, right here, that the first example that I showed you, if price starts to pull back and it creates a bearish structure, you know, comes down, creates a pullback, and then breaks this internal low point to the downside here, a new breakout structure is getting created. You just simply pull the Fib trick from the high down to the low point right here, and once a retracement starts here, then you will see that the Fibonacci numbers are lining up, the minus 0.27 or the 71 level are lining up exactly on one line or not. If they are lining up, you know, few pips of difference can happen. The level can be here, level can be here. The whole purpose of this is to somehow line these numbers up in one region right here. And if this happens, in case of this event happening, where gold starts to pull back, starts an individual bearish pullback, bearish order flow trend, which is internal in between the previous protected low point and in between the last recent retracement point, where we pull the Fibonacci from and where do we pull the Fibonacci. So in between these two structural points, a bearish pullback is getting started. And for example, price breaks the structure to the downside and you pull the Fibonacci from the high down to the low. The numbers are matching up. You have one more confluence to enter in this trade, because once I told you these numbers are magical, and if these numbers are lining up, most of the sell positions coming from here will be exited here, and that strengthens the overall bullish idea because the bearish pressure is getting exhausted and we can expect on the continuation of this overall bullish flow. So this is a really useful confirmation and one more confluence that I have been testing for quite a few while now. So a few months I've tested this out and it works like magic. It's a really powerful tool that you can use. And now let's see another example for the second application right here that I showed you. So the second live example is for that when price creates an individual structure, individual bearish structure, and beforehand it has created the continuation flow of the bullish idea with unprotected series of unprotected low points. So here we have a sweep of liquidity, and from this liquidity sweep, price broke the swing high point to the upside right here. And after creating the swing high break and the protected low point creation, price created an individual structure, series of unprotected low points leading up to this high point where we pull the Fibonacci retracement from. So in this case, I just marked out that here is the low point and here is the high point. As I told you, if the low point, one low point that is unprotected or several low points that are unprotected breaks right here, you pull the Fibonacci. And if that 71 level matches with the minus 0.27 level, you will have a really nice confluence that you can add to the 4-hour strategy. So let's just assume that price breaks this low point here to the downside and it goes down here and breaks many other unprotected low points on the way down. And in case of this event happening, you are pulling the Fibonacci trick from this high point down to the low point in case of the retracement happens here. And if those numbers are close to each other or matching up on the 71 level and the minus 0.27, you will have another confluence. So once again, this is a really useful trick that you can use to confirm yourself into a trade that is already confirmed by the 5 criterias or the 6 criterias, the added liquidity. But this is one more criteria that you can add to the system and can strengthen the trade. So this is how you can use the Fibonacci trick. And in the second video, we will talk about that how we are using this minus 0.27 level in another way for partial taking, but that will be related to the first entry model.